Thank you, Think Realty listener, for joining us today on the podcast. I'm so excited that you are taking a minute out of your day to join us and listen to some great guests as we bring you some great content today. But first of all, let me say a quick thank you to our episode sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you maximize the return on your investments. Experience the real difference with Real Property Management. Visit Real Property MGT, realpropertymgt.com. If you don't know it, right now there are a lot of people suffering because of the failed economic markets, poor investing choices, and overall just a lot of what's going on around the country. And today we've got an expert that's going to bring some great content to you, but not just an expert. These guys are I was going to say 800-pound gorilla, but it's more like 1,000-pound, maybe a 5,000-pound gorilla in the self-directed IRA space. It's equity trust. So let's bring on John Bowens today. John, are you with me here?
I am with you, Eddie. Hey, thanks so much for having me on the show. I'm delighted to be here and excited to share with your audience a little bit about self-directed retirement savings accounts and how investors are really maximizing their investment returns and opportunities through these various unique tax-advantaged investment arrangements.
Absolutely. We'll jump into that in just a second. And if you're not already, Think Realty listener and viewer, if you're not already investing through your self-directed IRA, you are missing one of the key components and key foundations of real estate investing. John, before we jump in and talk self-directed IRAs, give me your story. How did you get involved in real estate and in the space you're in today?
Yeah, so Eddie, it started academically. My upbringing was traditional finance. So I was really being groomed to become a financial advisor, wealth management practitioner, and everything I learned scholastically was about what is referred to often as modern portfolio theory. You'll also hear of this concept of the 60-40 model. So that's take your IRA, 401k, or other retirement plan, invest 60% in the public markets and 40% in fixed income securities. And then as you get older, you rebalance in order to mitigate your risk. And nowhere along the lines did I learn about being able to own real estate in an IRA account or a 401k or other retirement savings account. Now, all along the way, I was working for a real estate company, a mom and pop real estate company, and I was watching them on an annual basis pay hundreds of thousands of dollars in taxes. And so I knew there had to be a better way. And I'm a Cleveland, Ohio native, and just right down the street, there was a small company at that time, this was about 15 years ago, by the name of Equity Trust Company. Now, we're much larger now. And this was a company that had been in existence since 1974. And the company founder, Dick Desich, was widely known as the pioneer of the self-directed IRA industry. And I had the opportunity to be mentored by him. And he taught me about the ability to be able to use IRAs and 401ks and other retirement plans to invest in real estate. And I no longer have to be at the mercy of the traditional financial markets. I don't have to be at the mercy of a financial advisor or a wealth management consultant that is only going to place my monies into the traditional stock market or other public equity and public related type investments. So the ability to be able to invest in rental properties with my self-directed IRA is something that I have done and have had the opportunity. While the market's doing this, my portfolio is doing this. The opportunity to deploy private money lending strategies. So a lot of people aren't aware of the fact that they can use their IRA or 401k or TSP rollover or other retirement savings account to lend money to other real estate investors. And in addition to that, real estate investment partnerships, land investments, lease option to purchase, owner financing type transactions, real estate joint ventures. In addition to real estate, you could also invest in private equity, investments in hedge funds or venture capital funds. So what's interesting is that the law is exclusive, not inclusive. So the government only tells us what we can't invest in, not what we can invest in. And that's what our firm Equity Trust, and that's what I've been all about over the last 15 years, is training over 60,000 investors across the country on how they can deploy these non-stock market-based investment opportunities.
Yeah, that's awesome. And so 60,000 investors over the last 15 years. That's incredible. I know that you guys currently have around 40 billion or over 40 billion under management. which is just massive. I mean, the next IRA trust company like beneath you is there's such a vast chasm between the size that you guys are and really the next in line. And 60,000 people served is notable for sure. If you don't mind, I think that a lot of our audience probably at least understands a little bit of the self-directed IRA world. And they've heard me talk about it at length and probably at nauseum because it's saved me so much in taxes. It's allowed me to grow my net worth and really prepare for future legacy for my family. Tell me maybe some of the more creative or opportunistic things that are happening with self-directed IRA investing currently in the marketplace.
Yeah, absolutely, Eddie. And we can talk about singles and doubles as far as investments. And then, of course, we can talk about the home runs. Now, I always like to talk about some of the singles and doubles because the reality is as real estate investors, there are lots of singles and doubles and there are far few home runs. But, when we do hit the home run, right, those are, of course, the transactions that we love talking about. But out of respect for the audience, I always like to talk about some of those singles and doubles because that's what they're routinely familiar with. So for instance, owning rental properties, one of the strategies that I've had the opportunity to deploy is what I'll call a rent to flip type arrangement, which I have found very attractive and very lucrative for self-directed retirement plans. For instance, in 2020, I bought a rental property with 2 units, single family residential property with 2 units right outside of Cleveland, Ohio for $63,000. I partnered my traditional IRA with my Roth IRA. Now, we don't need to get into details of the difference between those two accounts, but one is tax deferred and one is tax free. The key here is that all of my profits, when I rent the property and when I sell the property, are going to be tax exempt in those two accounts. So we bought the property for $63,000 using my traditional and Roth account. And we knew that there was a lot of deferred maintenance on the property. The landlord was a motivated seller. They weren't doing a good job handling the tenants. They weren't doing a good job handling the maintenance. So we bought the property in somewhat of a motivated seller distress situation. We took care of the deferred maintenance. We stabilized the property. About 2 years and 3 months later, which was just this past year in 2022, we sold the property for a 32% annualized return on investment. We made a $35,000 profit between our self-directed traditional and Roth account. Now, the key here is that when we sold the property, there was no long-term capital gains tax. This is very, very important. No long-term capital gains tax, no recapture depreciation. Along the way, we didn't have to worry about a Schedule E or any other type of tax returns. It was all tax exempt in our self-directed IRAs. Now, if I compared that transaction to had I done that investment outside of my IRA, we would have paid approximately $5,000 in taxes. This is what I call, Eddie, compounding interest in the absence of taxation. So if I eliminate that variable of taxation, I have an extra $5,000, which I then put into a private money loan that I made to another real estate investor to flip a house and made an 8.67% return. So we're compounding our money faster, which, Eddie, what this allows us to do is it allows us to get to our retirement goals and our financial goals in a shorter period of time. So that's a really basic transaction. I would consider that a single, maybe into the double range. The good news is while the market was doing this, we had the opportunity with a self-directed IRA to begin and continue to advance our investing career. Now, as far as more advanced strategies, one of the questions that I get quite often from investors is, John, I don't have a lot of money in a retirement plan. Maybe I'm starting late. Maybe I liquidated my 401k years ago to buy real estate and I never put any more money back into an IRA. And so now I'm playing catch up. That's okay. I work with investors like that every day. For instance, Doug, an investor that I started working with, he's out of Dayton, Ohio. He opened a Roth IRA a little bit later on in life, and he only had about $7,000 in his Roth IRA. And in 2022, he put a deal together where he partnered with another investor, leveraging their capital and their retirement plan to be able to go out and fix and flip a property. So he did a real estate joint venture. He bought a property, single family residential property for $75,000. He brought his Roth IRA in at $7,000. His investor friend, Ron, brought in his money at about $68,000. They closed on the deal. About 5 months later, they sold the property and split the profits 50-50. Doug's Roth IRA benefited by about $26,000 tax-free, and then Ron received the other 50% of the profits. So in essence, Doug grew his Roth IRA from $7,000 to over $30,000 tax-free on one single transaction. So there are ways in which investors can get creative and grow their account in a very meaningful way. There's also equity participation loans that we can get into, investing in other types of real estate partnerships. Eddie, I know you're big in the mobile home space. The ability to be able to use an IRA to invest in mobile homes individually and sell on owner financing, or invest in a mobile home partnership type arrangement, storage facilities. The list goes on in terms of the capabilities of an IRA to invest in real estate.
Yeah, that's awesome. Yeah, we do. We have a mobile home fund that we have a lot of self-directed IRA investors that have gotten into it just because they want that consistent return. They don't have to go out and find the single or double, so they'll park it in some sort of a high yield fund. That's awesome. Both examples are fantastic. And I think that the average real estate investor sitting there, and what I want you to hear if you are sitting here and watching and listening, is how easy it really is. It's not a difficult thing, and having equity trust as a partner, as your custodian in this deal, they'll guide you on what is allowed, what's not allowed, so on and so forth. I know that you guys won't make any investment recommendations, but I know you guys have a lot of tools. I think, is it called Deal Street, or what's the name of the program you guys have where you have some vetted investment opportunities inside of your world?
You're right, Eddie. As a directed custodian, we give investors the freedom and flexibility to be able to invest in what they know, like, and trust, what they feel most confident in, not what an advisor or a financial planner is going to recommend to them. What we don't do is provide any type of investment advice. Well said, Eddie. And that's important for investors to understand. The beauty of a self-directed IRA and having that freedom is working with a custodian that's not going to attempt to solicit you into a specific type of investment structure. You are right in that we have a public-facing domain called investmentdistrict.com. Anyone on today's call can check that out. You don't necessarily have to be an equity trust client to look at that website. Again, it's investmentdistrict.com. And you'll find a variety of companies that are working with self-directed IRA investors. We don't review companies for merit, risks, investment objectives, things of that nature, suitability for your specific situation. But those are individual companies that we've identified as firms that are active in the self-directed IRA arena. So folks can certainly check that out if they're having trouble finding investment opportunities in and outside of their self-directed IRA. From real estate partnerships to turnkey firms, hedge fund investments, gold and silver, cryptocurrency, there are a variety of opportunities that folks can take advantage of. And then, of course, there's the DIY folks, the individuals that have the investment opportunities, have the ideas and the creativity, and then it's just a matter of putting all the pieces and parts together. And you are right, Eddie, in that we have a lot of support, one-on-one personalized support. Every new client has a individual onboarding specialist they work with. And folks can also check out our YouTube page. You'll find we have a lot of educational videos and training at no cost that folks can take advantage of to learn more about the do's and don'ts, different ways clients are investing, case studies, examples. So we spend a lot of time educating investors so that they can make informed decisions.
Yeah, and obviously I'm a client of Equity Trust, and I've been the beneficiary of a lot of the content that you guys put out. It's been very, very helpful over the years. Last question, and that is, right now, with how volatile the stock market is, I'm sure a lot of the people that are listening, viewing today, have money sitting in a 401k. They see those kind of diminishing returns that have been happening over the past 2 years or so now. And are you seeing a big flight of people from your traditional stocks, bonds, mutual funds, moving over into this self-directed IRA space and getting more into real estate and asset classes like you spoke about earlier?
Absolutely, Eddie. And it didn't start just recently. It really started in the aftermath of the Great Recession. So a lot of the examples, a lot of the transactions that I talk about, they started with clients back in 2010. A great example of this is two clients that I've worked with for a lot of years now, Kevin and Cynthia. They came to me in 2010, and it was so funny what they told me. They called themselves stock market refugees back in 2010. This is in the aftermath of the Great Recession, right? And they had 401ks and they suffered severe losses. And what a lot of people don't recognize, especially with what's happened in the stock market over the past, call it 6 to 12 months, is that let's say the market goes down by 18%. So let's say you have $100,000 and the market goes down by 18% and your retirement portfolio, your IRA or 401k goes down by 18%. Well, a lot of people think mathematically, I just have to make an 18% return in order to get myself back to even. That's not the case. You have to do even better than 18%. You actually have to do 22% mathematically. You essentially have to do 4% better than what you lost in order to get back to even. And oh, by the way, we haven't even factored in inflation, which is at an all-time high right now. So all along the way, you have inflation eating away at your dollars. So it's really challenging for investors right now, and I sympathize with a lot of investors. And so to answer your question, Eddie, absolutely, we're seeing investors migrate to self-directed IRAs. And to give you some evidence of that, when I started with the company 15 years ago, so this was, in the heart of the Great Recession, I went through that process. In the aftermath, we saw explosive growth with self-directed IRAs. We had about 100 employees at that point in time. We now have 430 employees. We went from about $10 billion in assets to about $40 billion in assets. And so we are identifying investors out there who are looking for a way to migrate away from the traditional financial markets and into alternative investments like real estate. And that's what we're all about. The Kevin and Cynthia story is really interesting, Eddie, and I could spend a lot more time talking about it. But to give everybody kind of the brief synopsis, they had about $200,000 in their 401ks, and they rolled those monies over into self-directed traditional IRAs. And then they subsequently converted those to Roth IRAs. And so we talk a lot about in our training how you could actually convert tax-deferred money into a Roth account. You got to pay some taxes, get the taxes out of the way in the seed so you don't have to pay in the crop. And that's what Kevin and Cynthia did. So they went out over the last, call it 12 to 13 years, and they've done over 20 real estate transactions in their self-directed Roth IRAs. They've grown their Roth IRAs from about $200,000 to over $1 million in properties. They still have 14 cash flowing properties in their self-directed Roth IRAs to this date, and they're generating $130,000 in tax-free cash flow on an annual basis. Now, these are in their Roth IRAs, and they are over the retirement age of 59 and a half. So every year, as they have profits coming back in, they pay 0% tax. When they want to distribute money from those Roth IRAs, they pay 0% tax. But when I ask them, what are you planning on doing with the money in your retirement years? They passionately stated that they don't plan on touching the money themselves. They're using their Roth IRAs as an estate planning or legacy planning tool. So they want to leave their Roth IRAs to their children or grandchildren, and those children or grandchildren will inherit the accounts tax-free, be able to continue to maintain the accounts for a certain number of years, which is 10 years at this point in time, and they can distribute all the money and the properties if they choose to do that 100% tax-free. So the ability to avoid or mitigate tax liabilities, the ability to invest in a hard asset like real estate outside of the traditional financial markets is exactly the benefit that investors are looking for and why they seek out the solutions of a custodian like Equity Trust.
Yeah, absolutely. Thank you. So well put, John, and I appreciate you, being concise and kind of putting all that together. If you are not currently using a self-directed IRA, I want to just implore you to consider it now. And Equity Trust obviously is someone I work with. It's somebody that I trust and believe in them. They're obviously a huge giant in the industry, but they've been around for a very long time. I grew up in the Cleveland area. They've got a very well-respected name in our area as well. So John, thank you so much today. Can you just give them real quick how to contact you or the best way to reach out?
Yeah, absolutely. So trustetc.com is our website. You can also check us out on YouTube. Just search Equity Trust on YouTube if you want to learn more about the different ways you can invest with a self-directed IRA. And last but not least, Eddie, I'll provide you a link if you want to share it with folks. But we do have a couple video trainings that we provide to folks to get started. One is called Diversifying Beyond the Stock Market, and the second is my course on private money lending. So I'll provide a link to you on that if you want to post that information. Otherwise, folks can go directly to our website or our YouTube channel to learn more. Reach out to us, speak to one of our IRA counselors. We're here to answer your questions. That's why we're staffed with over 400 associates. We find that most investors, especially when they're new to this, they want a little bit of hand-holding. So please don't be shy. Please reach out to us. We're here to answer questions and provide guidance. We don't sell investments or other types of opportunities. We're here to answer questions, and if folks are interested in a self-directed IRA, we're here to be the custodian for them to help them achieve that.
Awesome. Thanks, John. And if you provide that link to us, we'll provide that to all the Think Realty viewers and listeners. Thank you so much for being with us today. Say hi to George and Kent and everybody there on the team. Obviously, you got a fantastic team. Always enjoy hanging out with you guys. Thank you so much for being on the show today.
I'll do that. Hey, thanks so much, Eddie. Always appreciate spending time with you, and definitely continue to do everything that you do. You do a great job with it. Thank you to Think Realty. You guys do a great job of providing education and information, and look forward to the next one.
All right. Thanks, John. I want to say a quick thank you again to our episode sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Thank you so much, Think Realty viewer and listener, for being a part. If you're not getting our magazine on your doorstep every single month, go to thinkrealty.com, or you can also go to your local Barnes & Noble retailer and pick it up off the shelf there. Also, if you're not following along or participating on our social media channels, make sure you join us there on Instagram, Facebook, and LinkedIn and Twitter, and participate with us there. We'd love hearing feedback. If something in this show you need help with, just reach out or comment, and we'll make sure to provide you any extra guidance that you need. Thank you so much, Think Realty, for watching and listening today. Have a great day.